Welcome back to the Dividend Diplomats YouTube channel. You've got your boy Bert, the herd in the house, and you know you're rolling with Lanny, the Dividend Diplomats, and we're here to talk to you about not one, not two, but again, 3 dividend stocks to buy now that the stock market is turning red, baby.
Before we get into them though, smash that subscribe button. Give us the thumbs up, everybody. Let's crush it. Let's keep growing our YouTube channel, but more importantly, let's keep bringing you dividend content to help you grow your passive income. We're going to be recording this watch list with prices as of September 10th, 2021, so please keep that in mind as we go throughout the video. This was a very exciting week to build our watch list though, Lanny, wasn't it?
It was a great week. S&P 500 broke below 4,500 and actually was down, I think, every day for 5 straight.
When was the last time that happened in the stock market?
It's been a few years. It's been a few years, Bert.
Yeah, so what is that?
Or probably last year. But
that gets us excited though, because we get pumped up. We don't run for the sidelines. We don't scream. We need to get rid of all of our assets. If anything, we say, how do we get our cash off the sidelines into the market to take advantage of some of the values that are presenting themselves? And as you know, we are always on the hunt for undervalued dividend stocks.
Always on the hunt. When the bulls are running that way, we're running this way. We run into the fire because that's where the sales and opportunities are. Again, go against the grain, baby.
Yeah, so that's what we did. We have 3 dividend stocks to keep an eye on. 3 stocks that we each own in our portfolios or our WISE portfolios. So we've done a lot of the heavy lifting in the past when we initially bought the stock. We like them enough to buy them once, to buy them twice, some of them to buy them 4, 5, 6, 7, 8, 9, 10 times. We've bought some of these stocks a lot of individual times.
Finally 100 shares of one of these stocks.
That's fantastic news there, Lanny.
Yeah, check out the stock purchases video from earlier this week if you haven't seen it already, where I invested over $1,500 and Bird doled out at least over $500 as well.
Excellent. And then hopefully this watch list is going to prime us to have another big week in the future where we can give you some more future great dividend stock purchases. Really fast though, everybody, how do we evaluate these stocks? How do we know that these stocks are undervalued dividend growth stocks? Using the Dividend Diplomats Dividend Stock Screener. 3 metrics of our stock screener: price to earnings ratio less than the S&P 500, payout ratio less than 60%.
What's that sweet spot?
40 to 60%.
That perfect payout ratio. Bert's patent pending.
No, not quite. Maybe we'll get the paperwork filed one day. Number 3, the history of increasing dividends. Oh yeah, there's a bonus metric, the dividend yield there. Still hasn't quite made the cut to be one of the 3 metrics to increase it to 4. Maybe we'll get expansion in the future. When the NBA finally gets an expansion team in Seattle, maybe we'll look at adding dividend yield into our screener.
Let's hear it. Now guys, it's all about getting cash off the sidelines, as we say almost at every video. You want to put that into income-producing assets, assets that will appreciate in value, assets that provide you income. Our main goal, I know Bert, you and your wife and my wife and I, our main goal is to just buy dividend stocks, to use that dividend income as that main source of passive income on the journey to financial freedom. It's fantastic when you think about it. You buy a stock, pays a dividend. That dividend gets reinvested to buy more shares. Those shares also increase their dividend. All of a sudden, you have just this perfect clockwork of dividend reinvestment happening.
And each one of the 3 companies that were featured today are masters of that dividend growth wheel, the cycle that Lanny was just talking. So let's jump right in, everybody. Remember, prices as of September 10th. I just want to reiterate that one more time. Dividend stock number 1. This company has been featured a lot in our YouTube channel recently. We looked, we did an analysis. We said we were buying the dip several weeks ago. Guess what happened? Company kept dipping. It kept going further. We bought. We're going to continue buying at these prices. You can dip as many times as you want to. Here, this company is AbbVie, ticker symbol ABBV.
Yep. At the time of this video, the stock price again was at $106.68. So about $3 to $4 lower than what we just talked about for AbbVie when we were buying the dip. So now the question continues. Bert, are you going to buy the dip before we get into the stock metrics?
Most likely, because the metrics are looking great. Let's jump right into the metrics.
That first metric, price to earnings ratio, analysts are expecting $12.62. So price to earnings ratio for AbbVie, again, ticker symbol ABBV, is extremely low at only 8.5 times forward earnings.
Significantly below the S&P 500, which is in the 30s now. Exactly.
What he said.
So number 2, the payout ratio. They're $5.20 annual dividend. Divide that by the earnings of $12.62. That gives you a perfect payout ratio of 41.20%.
Wow.
Right in the sweet spot where we want to see, on the low end of the sweet spot, as a matter of fact.
Which is a great thing.
It's a fantastic thing, especially with some of the news that we'll get to after we run through the metrics. What's that third metric, Lanny, the dividend growth?
Dividend growth. They've been growing their dividend for 7 consecutive years post their spin-off from Abbott Labs, which ticker symbol is ABT. They've been growing their dividend again for 7 years, and that 5-year dividend growth rate on average is over 18%.
I'm just shaking my head because that's an insane dividend growth rate, especially.
It's good.
It's good when you consider that their dividend yield, that bonus metric, is now almost 5%. It's 4.87%. I'd challenge you to find too many dividend stocks with a near 5% yield and an 18.35% average dividend growth rate.
My hat on that one.
Yeah, that's big news. And what's been going on with AbbVie, they've been in the news with some of their drugs. The FDA is wanting them to issue some warnings, put more warning labels on their products because some of the tests that's come out. So there's a lot of news about this future earnings stream, and that's important because as AbbVie tries to diversify away from Humira, their main drug, they're looking for that new income stream to help grow earnings and dividends. That's what's prompted the fall, is the potential worries with this drug.
And the good thing to keep in mind is that this drug, which battles rheumatoid arthritis, really was only 3% of net revenue as of the last earnings release.
Yeah, and why I said I wanted to come back to that, if their payout ratio is 41%, say they have a slight ding to earnings, it's not as if we're thinking their dividend's going to not be safe. There's plenty of room for them to continue paying out their dividend at their current level and growing their dividend, even if there is a slight pullback in earnings.
There it is. AbbVie, again, to run back through, price to earnings below 9, perfect payout ratio at over just about 41%, and long-term dividend growth at over 7+ years at an average rate of 18%, with a blistering dividend yield of 4.87%.
Dividend stock number 2, let's move to the consumer staple sector. This company is Unilever, ticker symbol UL. It's been a company that my wife and I have been buying and adding to her portfolio over the last few months in little bite-sized pieces, and we're looking to continue growing her position in the company.
When it burns, it grows.
It does. That's exactly right, Arnold. Kidding. But let's run them through the screener to see why they are on our watch list. Their price as of September 10th was $54.73. Their forward earnings, $2.89. Their PE ratio is 18.94.
Oof.
Not the cheapest.
Not
Clearly,
the cheapest.
Consumer staples sector is very hot right now. They're cheap in the sector compared to some of the other companies like your Procter & Gamble, some of the other giants. So it's not the cheapest on the list. AbbVie is obviously a significantly lower discount, but it's a discount to the market, which is the first metric of our screener.
Yep, going into that second metric, which is always harder to determine because they're an international-based company. Again, Unilever, ticker symbols UL, as an American depository receipt, ADR. Their dividend calculates out to a yearly dividend right now. Bert, I see that you have around $2.02 on a given year. That payout ratio is about 69%. A little bit on the higher side, not worried. Again, hard to always determine, so it's okay.
It's in line with Procter & Gamble too. It's in the same ballpark as them. In terms of dividend growth history, their 5-year average dividend growth rate from Dividend Investor is 7.94%. And similar to what Lanny was saying, because of the conversion of the currency, seeing an exact number of years increased, it's always difficult for Unilever. So we just decided to look globally here at their dividend history, and you can see that their dividend is trending upward, which is what we want to see for a dividend stock.
Upward for that third dividend metric. Lastly, the dividend yield is almost at 3.7%. Again, we're almost talking now 3 times the S&P 500, because the S&P 500 still is almost at 4,500. The yield is obviously lower now because of the appreciation in the stock market. So Unilever at 3.69%, that's not too shabby.
No, not at all. And their price has been down for the year. They're down nearly 10% year to date, almost 12% over the last 50 weeks, well below the market, which we all know, even though the market was down this week, the market has been on fire and increasing the year. So it's nice to see them going in the other direction, which is what we're looking for with undervalued stocks.
Bert, you want to summarize Unilever with their dividend metrics?
PE, almost 19, payout ratio, 69.9%. 5-year DGR of 7.94 with a dividend that trends upwards with a yield of 3.69%.
There it is. Now to dive into the third dividend stock to buy potentially right now going in during this week of September 13th is Big Red, Verizon Communications. They're back on the watch list. Ticker symbol is VZ. You know, they're trading at $54.23 right now at the time.
That's on the low end of the range that it feels like they've been in for the last year.
Analysts are expecting, you know, to get into the first dividend metric, the price to earnings ratio. Analysts are expecting $5.31. That equates out to a price to earnings ratio of only 10.21.
Fantastic. Cheap compared to the market.
Right. So, Bert, you want to dive into that second dividend metric?
Yeah, their annual dividend, they actually just announced a 2% dividend increase right there. Their new annual dividend is $2.56. Divide that by the forward earnings, that gives you a perfect dividend payout ratio of 48.21%.
Wow, perfect payout ratio again on this list. That makes at least 2 out of 3 companies with one.
Yeah, why don't you tell us about that third metric?
That third metric, again, going right into the dividend growth. Thanks, Bert, for the mention. Over 16 plus years of increasing their dividend year after year after year, albeit it's at an average dividend growth rate of 2%. You know what you're going to get. Low growth with a higher yield, as we'll get into, Bert will dive into on the bonus metric. But again, going on the road to dividend aristocrat status, really trying to, you know, shoulder block AT&T out of the way as they're going to come off that list.
Well, they saw an opening for people's portfolios and on the aristocrat list for somebody new. So yeah, here comes Verizon charging. That bonus metric is the dividend yield with that new $2.56 dividend. Their yield is closing in on 5%. It's 4.72%.
Wow. And on a year-to-date basis, that stock continues to fall, down about 8% this year and almost 10% on a 52-week basis.
So to summarize their metrics here quickly, PE ratio 10.21, payout ratio 48%, 5-year dividend growth rate 2.12%, 16 plus years for increasing their dividend with a yield of 4.72%.
Wow, so 3 stocks here to buy potentially this week. They're all yielding pretty well. You know, again, all over 3.6%. Unilever, then Verizon, then AbbVie. Again, those are the 3 stocks to watch right now. Bert, out of this list, what's your favorite one right now?
I mean, right now I'm probably going to go almost in order from the stocks we talked about. I would go AbbVie, Unilever, Verizon right now.
Nice.
Mostly because I want to keep building positions in our portfolio and in my wife's portfolio for AbbVie and Unilever. We have a pretty solid position in Verizon. What about you?
You know, I've got my 100 shares now of Verizon, and I just realized in the last video I was calculating my new income add by only the 250 one and not the 256. So understated there a little bit. You know, we have a lot of Unilever in my wife's portfolio. It may be time to buy a couple more shares. We'll have to check out to see that overall concentration. Verizon, I might be okay at 100 shares. Again, if it drops below 54, I'm there. AbbVie, again, I have a lot of pharmaceuticals with, I've got Pfizer, I got Viatris, I've got GlaxoSmithKline. Now I've got a nice AbbVie position. My order, I guess, would be same as this, AbbVie, Unilever, Verizon.
There we have it.
Dang.
There we have it.
What about you, though?
Yeah, let us know what you think of the 3 companies. If you don't like any of them, let us know and tell us what companies you're watching instead. We want to hear your feedback and what other future potential dividend stocks we should feature on our YouTube channel.
Definitely leave the feedback in the comments. Like the video right now if you haven't already. Guys, turn that thumb blue. We love you guys for being a part of this dividend investing community. And hopefully we're providing some form of insight to you in the dividend investing world and what stocks to buy. That was Bert, and this is Lanny from the Dividend Diplomats.
Over and out.